It's a pleasure to have you again, once again, this week on The Link. It's budget, it's tough economics, it's high cost of living and high commodity prices. However, we are keeping a positive note anyhow. And tonight we're speaking about the budget and what's coming up in terms of tax. Normally when the budget comes, people are worried about tax. We are going to talk about it. Do you have anything to be worried about? My guest tonight is Mr. Trevor Lukanga, who is the Senior Manager, Tax in PwC. Trevor, welcome.
Thank you, Sam.
On the whole, how do you look at the budget? What is in the coming budget that is good for business on the whole? What they call the spirit of the budget?
Well, from on the whole, it is a good budget in terms of, you know, given what the times look like. And we've seen that there've been reallocations and allocations of, you know, to different government vaults here and there.
Yeah.
But then I think in terms of increment, you know, there's been a small increment in the budget as well, compared to what we had last year.
Yeah.
And from a tax perspective, the good news first is that this time around there is really no increment in terms of taxes.
Okay.
However, there's been good measure from the government where we are seeing that one of the biggest issues which has been an issue for the government is the issue of domestic arrears.
Yes.
Domestic arrears as of June, the last that I saw, as of June 2021 was about 4.6 trillion.
Yes.
So that is money really that government's holding for us, you and me. So this time around, one of the suggestions that has come through from a VAT perspective, unfortunately, which was not in the original VAT amendment bill, but we get to learn it's one of the suggestions from the Finance Committee at Parliament, is the fact that suppliers to government will not be required to pay VAT not until government pays.
Okay.
So what that means is that it's going to help suppliers from a cash flow perspective, because what we've been seeing is that you raise your invoice, then you're supposed to be paying it. You're supposed to be paying VAT off that invoice to the URA, you know, the following month. Now, as you know, the economy, how it's running, there is no cash, you know, people are struggling. So that will give some respite from a cash flow perspective, because then you don't need to go to the bank to then come and pay your taxes. So if passed, that's a very welcome measure, which will also help in terms of managing some of this problem of domestic arrears. But then also us as a tax-paying community, government is one of the biggest, you know, customers that supplies are made to. So if government is if you're not going to pay that VAT not until government pays, it means there is an obligation also from the government side to pay quicker, so that then at least people will have money in their pockets and able to do what they are doing.
Before you leave that point, Trevor, explain a little bit. When I'm a government supplier, do I only pay VAT? Do I pay any other taxes?
So as a government, when you supply goods or services to the government, so if your goods or services are subject to VAT, then you're required to charge VAT of 18%. However, on top of that, then there is a withholding tax that comes off it, because then when you supply government, be it a parastatal or any of the ministries, departments and all, so government will withhold from you a 6% withholding tax.
Okay. So those are the two main taxes if I supply government. Withholding, which is done by government.
Yes.
At source.
Yes.
And VAT, which is done by me and remitted to URA.
Correct.
And this time round, until they pay me, I won't pay.
That's what has been suggested.
Great relief. Okay. Take us through the other tax heads in terms of changes, good changes for the businesses in this budget.
Okay, in terms of the obvious one, and I guess probably people are already aware, is this time round there is no increment of excise duty on on fuel, which is a good thing, given
even though we are suffering.
Even though we are suffering. So
Okay.
government has nothing to do with it for this time round, because you know there are no increments.
It would have been a shame if they did.
I know.
Continue.
So then the other one is the withholding tax on a business asset. So there's been an issue where a business asset is purchased.
Okay.
A 6% withholding tax is supposed to be withheld by the purchaser from the sellers.
Business asset. What are we talking about? A vehicle?
So
land?
That's what it has been, because once you're in business, then you have your assets are business assets.
Yes.
So now clarity has been made to the point that a business asset is restricted now only to land.
Hey.
So you can't withhold from anything else for that particular provision of the withholding tax unless it is land. So if I sell land
to me,
to you as an individual, there are some exceptions. So I would start with from a business perspective. So from a business perspective, if a company sold its land to another company, so a 6% withholding tax would have to be withheld from the seller's payment unless the seller is exempt from withholding tax.
I understand that.
So that's what the new law is saying. However, in the past, it's been that if a company sells to you, then you need to withhold, the withholding tax obligation would arise. So now the new law is helping in about three things. One is that it's clarifying that a business asset is not only going to be restricted to land.
Okay.
Then also there are some exceptions that do not qualify. For example, if you and me are dealing, you know, either I'm selling to you land as a one-off transaction, that will not be subject to withholding tax.
Okay.
Also, if you and me are land dealers, so we deal in land, then that will also not be subject to withholding tax. So they've included some exemptions, but also where you've been included on the URA withholding tax exemption list, then you'll not be subject to this particular withholding tax.
Let's get some credit, Trevor, before we leave that point. Business asset is now land. Before it was what other things?
Anything else a company would own, you know, name it, vehicles, furniture, cups, tables, you know, everything that
if you sold them, withholding would be on there.
That's what the previous law is
very
providing.
Interesting. So viewers, if you're in a company and you're selling, now WHT withholding tax will only be on land. I hope you take note. You accountants in the companies. Trevor, there's something else. Rental income. Big deal.
Yes.
What's the issue there?
So for the rental income, the change that has come through, and which is a welcome change for the companies, is that companies are now going to be subject to the normal corporate income tax, just like any other business entity. Because what we've been having in the past is that effective 1st of July 2021, the tax law has changed with respect to rental income to provide for taxing only 25% of your rental income.
Okay.
So what that meant is that you get a 75% deduction for expenses based on your gross rental income, and then the 25% that is left would be subject to tax at a rate of 30%.
Let's break it down. I know those numbers. If I earn $1 million shillings, then
yes,
250,000 would be what would be taxable.
Correct.
Am I on point?
Correct.
You can continue from there. Just break it down.
So 250,000 is what would be subject to tax at a rate of 30%.
Okay.
So now the change is now saying that person who earns $1 million shillings, you're going to be allowed a deduction for all your business expenses. So for example, if you went to the bank, you went to Stanchart and got a loan, so then the interest that you pay off that loan is going to be allowed a deduction. However, the change is that there is a cap that has been put. So if your expenses exceed 50% of
which
your
is 500,000 in this case.
of your gross, yeah, exactly, of your gross rental income, which is 500,000. So you can only get a deduction up to a maximum of 500,000.
Okay. Before then it was 750. Now it is 500.
Yes.
So the taxman has reduced the amount that they cannot tax me on. Is that correct?
They've reduced the amount that you can deduct for purposes of expense, because before, like you said, for example, before you deduct 750, but the 750 was deemed, because it could be that you've over deducted because you have 750, or you could have under deducted because you could have had more expenses. Now the taxman saying, okay, we recognize that the expenses have been incurred, but now we shall limit your expenses to a maximum of 500,000 for purposes of our example. Then whichever exceeds the 500,000 can be carried forward and would get a tax deduction in the subsequent
I was about to ask, supposing I have more costs, more than the 500 allowable, what happens? So you said it's carried forward to the next year?
Yes. So you get a deduction in the subsequent year.
What if the costs there continue to be more than 500? What happens?
Well, for now, the law is saying it will be done in perpetuity for now.
Okay.
So there is no limit as to how much you can carry forward the expenses.
Okay. Thank you very much, Trevor. Those numbers, viewers, if you have not understood, you need to go back and listen to this conversation. It's on YouTube, www.youtube.com/NTV Uganda, and you click videos and you search NTV the link. You'll find this conversation. We have been doing some numbers there. You may be saying, hey, I am lost. Go back, listen slowly with a pen and paper. If you can't understand it, look for Trevor at PwC. Trevor Kalango for you. At PwC, they will explain to you these things. We hope that we added value to you in terms of tax and the budget. That was the link. Thank you for joining us tonight.